Hi everyone and welcome to Boothy's Bites for November. Boothy, what? We're already at November? What is going on?
Yeah, I know, it's getting too close to Christmas, isn't it? Yeah, pretty amazing. What a whirlwind of a year. Anyway, thanks for checking in today.
Thanks for having me. And so speaking of a whirlwind, let's jump straight in with the RBA. So what have they been up to? What's their whirlwind?
Oh. Yeah, so a little bit disappointing for people who are borrowing money, so the interest rates did go up. I mean, we kind of talked about it a little bit last month. We've had some pressure with certainly some of the fuel costs in the marketplace, and some of the things have been sort of keeping inflation a little bit higher than the Reserve Bank of Australia wanted. And again, the rhetoric has always been this year to try really cool inflation. So Michelle Bullock really had no choice but to sort of make those changes. I think there was a lot of deliberation about when they should hike the interest rate. Should it be now or should we wait and just see? But I think in simple terms for me is if they increase now, I think they won't go. My call is there'll be no change in December. And what that means then is we've got a couple of months break with the Reserve Bank, so we don't come back until February anyway. So I think they'd rather do it now, sort of see how that sort of peters through the Christmas season, and then revisit the numbers back in February when we get there. So unfortunately, we copped the 0.25%, which does impact interest rates going up by 0.25% as well. But yeah, it's interesting times. I do think this should be the last one in the cycle, though. That's my gut feel.
Your prediction. Well, fingers crossed you're correct and everyone can have a bit of a breather for those couple of months. Everything crossed.
Yeah.
And so what about home loans? What's happening on that front at the moment?
Yeah, so that means it's becoming a lot more challenging for borrowers. I mean, the cost or affordability piece around applying for new finance has been very, very difficult for a lot of people. So yeah, it's tough. The refinance market has probably cooled down a lot. It's certainly, there's no cashbacks really left in the market, so that ability and incentive to move has really died down to pretty much nothing. So it is a quieter market there. We are getting a lot of first home buyers looking to buy their first place. I think with the increasing in the difficulty in finding accommodation, but the second thing about that affordability of renting accommodation, I think that's pushing a few young people or younger people to try get into the property market on that first property. Yeah, we are seeing a lot of pre-approvals and people trying to push in to try take advantage of the first homeowners grant, the first home loan deposit scheme, and those schemes as well. So we've been busy doing that. What else have we been doing? The other thing we're really focusing on for a lot of our financial planning clients is really getting cash and budgeting back in sort of in the correct structures. And what I mean by that, a lot of our clients who potentially, they've got an investment property, they own their own home, their investment property repayments went to principal and interest. And really now what we're trying to do is sort of restate those loans into interest only, and then so they can concentrate on paying principal and interest on their own home, which obviously from a tax perspective there's a benefit. But when we were at sort of 2%, the impact of P&I on that loan was a little bit less. Today, though, it's obviously a lot harder for clients to manage both. So yeah, we're seeing a bit of that. So cash flow budgeting is one thing, a fair bit of first home buyer market, and that's sort of that's what we've got right now with the kind of work we're doing through the network as well.
Not bad. Still a bit of work around for the team to get through. And so what about the offers that we have on the table at the moment for these home loans?
Yeah, so we're just waiting for the new interest rates to come into play. So the 0.25% increase, I think pretty much everyone will pass that full 0.25% on right now. Some of the specials that we are working with, St George Bank has had some really heavily discounted interest rates. So we've been applying for finance through St George Bank quite regularly. They've been great. For large loan amounts and low loan to value ratio loans, they've got some heavily discounted rates, which are sort of market leading. A couple of the other niches out there. So First Mac, they're based in Queensland, and they're supporting owner occupiers and investors with some very cheap rates as well. And in fact, their investment rates are pretty amazing. So yeah, those guys as well. And then lastly, Bank of Australia, they've got some cheap rates there down at sort of that 5.98% principal and interest, or interest only variable as well. So yeah, there's some good offers there. I think really my sort of call out for people who are looking at their interest rates, if their own home interest rate is more than 6%, they should reach out to a broker and just have a conversation just to get a health check. And if their investment loans are above 6.2%, well, again, they should reach out to their mortgage broker and do a review as well. If they do believe, or if a client does believe they've got lots and lots of equity in their property, which has changed over the last sort of 12, 18 months, we'll again do a review, because pricing is dictated by loan to value ratio right now as well. So yeah, some really heavily discounted specials, and it's good.
So all in all, get in touch with your broker.
Get in touch. That's it. This is the time to do it.
And so I heard that you caught up with Heartland Seniors recently. So what have they got on the table? What's on offer there?
I mean, that's a really good sort of segue. I mean, most of the time we're supporting sort of first home buyers and, wealth accumulators. I mean, they're sort of the demographics that we're looking at. But for someone who's a little bit more mature, probably retired, I mean, you've got to be retired to use this product. There is a product called a reverse mortgage. Now, look, it's not for everyone, and it's certainly not something, we provide finance for and don't provide advice around that finance as well. But if you've got like an elderly person who's in a home with lots and lots of equity, and they're looking for funds for lifestyle, or to renovate their own home, or just to maybe even sort of extend loans into retirement, the reverse mortgage is a unique product, and Heartland Seniors offers a great product there. They do also aged care. If you've got family members moving from their own home to aged care as well, they can provide that sort of bridging finance to get into aged care as well. So yeah, reverse mortgage is quite a specialized product. Heartland Seniors got a really good sort of lens and feel around that product. And yeah, look, again, if you're a mature client, I've got a dog trying to get outside. Apologies, he's opening the door right next to me. I'm thinking, what's going on? Someone's breaking in the house, and it's a dog breaking out. But if you're looking to if you're looking to get finance, if your parents are looking for, or elderly parents are looking for finance, reach out and talk to us. It's certainly if your elderly parents are having to make provisions to move into aged care, again, a great service and a great sort of niche product as well there by Heartland Seniors. So yeah, a little bit about reverse mortgages.
Awesome. And so now moving on to self-managed super funds, what are we seeing in the way of refinancing and purchases?
Yeah, so similarly, it's a niche product. Interestingly, twofold. Number one, the interest rates to refinance right now, if you're an old bank client, sort of St. George Bank, Macquarie Bank, AMP Bank, and other major banks who aren't providing the product anymore, there's definitely worth a review to refinance and look at whether there's going to be a benefit. We're looking to save sort of 2% interest rates on those products. But on the flip side of that, we do have a lot of clients right now who potentially don't feel it's affordable in their own name to actually gear up and borrow and invest in property. However, they've got quite a large and mature superannuation balance, and they feel now's the appropriate time to sort of reach out, get some advice, whether the fund is eligible to actually borrow, and can they create that structure, or secondly, is it appropriate to buy a property, and what sort of affordability to buy a property in a super fund. Obviously, from a servicing perspective, it's down to the rent income, the contributions to the super fund to actually quarantine the serviceability. So you're not going to impact your personal lifestyle income and expenses by actually gearing in super, which is attractive to a lot of people right now who sort of just want to get through this tougher time in their personal name, but still want to build wealth through property.
Mm-hmm. Yep, awesome. And so now moving on to my favourite part of Boothy's Bites, your property update.
Well, I think I've been quite right again. So it does seem there's a lot more property on the market, which is great. Springtime is always that time. But with that extra property on the market, the clearance rates haven't been as great. Having said that, though, I think it's definitely in pockets. So what I mean by that is the first homeowner space, or that sort of affordable investor space, being up to sort of that $1.5 million, is being hotly contested. There's no doubt about it. The auctions are busy. Lots of people going through these open homes, and certainly they're not spending too long on the marketplace for that sort of price point. But I think what we're starting to see now is that sort of $2 million plus, that sort of mid-range family home in sort of Sydney, Melbourne, Brisbane. That market has certainly weakened. Again, affordability for most has decreased, so therefore the ability to jump into that market, there's less, I suppose, eligibility by borrowers. So yeah, that sort of I think we've got two markets running parallel right now. So, and I do expect next year that that high end will start to cool a bit further as well, especially with the volumes, the ability to borrow right now is certainly a lot tougher for most. Yeah.
Definitely. And our last little bit, the update with Lydian HQ.
Yeah, well, we've been very, very busy this year. So we've been recruiting lots of new brokers to the club, which has been cool. And yeah, look, we've got our little sort of niche space in the Gold Coast now. So we've got Jamie Peach, or James Peach, or Peachy, has joined us up in the Gold Coast now. So yeah, it's been really nice. The last sort of 4 or 5 months where we've had sort of 5 new brokers join the team has been great, because now we generally have that national footprint of brokers. We've been busy getting them onboarded, getting them sort of set up, plugging them into some of the networks and the partnerships that we've got, and also them going out to market and building their bases. But yeah, we start 2024 with a pretty big team, so which is very exciting. So woohoo! Yeah, so no, it's been great. I'll tell you, I'm knackered though, but anyway, looking forward to Christmas.
What's what? Only 6 weeks away.
Yeah,
really,
that's it.
So
Yeah.
we're nearly to the finish line.
We're on the home run, but no, it's been great, and it's so nice to support people, people starting their businesses or coming over to enhance the services for their businesses, or aspirationally just wanting to grow their businesses. So it's really good that we're having these conversations, and I think certainly the partnership side of the businesses has been really well supported. We've had a lot of work we've been doing for H&R branches, which has been great, and also a lot of the financial planners that have been speaking about offering this service to their clients are now coming online. They're starting to engage and sort of talk about lending and property as well. So yeah, hopefully that sort of financial advice around property and lending next year is going to be a big part of Lydian too. So yeah, fingers crossed again. Yeah,
bring it on, bigger and better. 24. Well, Boothy, thank you so much for your time, and thank you to everyone who's watching this. And I guess we'll see everyone for the last one for 2023.
Yeah,
in
looking
December.
forward to Christmas. See you later, guys. Thanks again, Jackie.
Thanks,
Bye.
Boothy. Bye.